We're just a day away from the end of September, and it's been a manic month for U.S. stocks. If you look at the Dow Industrials, you'll see the up and down behavior. We see the index lose over 250 points 4 times this month, but we've also seen 6 rallies of over 1%. Let's bring in Stephen Wieting, economist and managing director at Citigroup Global Markets. His company is bullish with an S&P year-end forecast of 1325. And Stephen joins me now here on set. Stephen, welcome to Bottom Line. Thanks for coming on today. You saw that Dow chart. What's your first impression?
Well, it looks like in the U.S. we've been in a trading range buffeted by large global macro issues, which could be overwhelming. And if we set them aside, domestic fundamentals would show through. Seasonality, things that our strategist Tobias Levkovich could talk to you about in good detail.
Before we get to the global picture, let's talk about that Dow again. In the middle of August, the industrials swinging by more than 400 points for 4 straight days, and that was a first in the 115-year history of the index. It's fallen near 11% since hitting a high back in April. Are bargain hunters helping to stabilize the market? Is that what we're seeing right now?
Well, I imagine that anyone looking at valuation in the U.S. Has to be relatively comforted. I mean, expectations for the U.S. economy are extremely low. Yeah. Investors are turning over par to the U.S. government, getting back par 10 years from now in the TIPS market, accepting nothing but inflation, which is taxed in the meantime. So a lot of our markets trade on a valuation basis as if there's very low expectations out there for the long run.
You were talking about the global picture. We have a Bloomberg global poll out, and it shows a majority of people surveyed, 68%, they think that the global economy is deteriorating, and clearly people are thinking that things at this point are starting to get worse. Is the perception reality?
Yeah, we think that the global economy is slowing, that there is likely to be a regional recession in Europe in the coming year, and that political events and credit events are going to be very important there. The exact timing and how well that is controlled is an open question.
A regional recession in Europe precipitated by a Greek default?
Precipitated by a Greek default with political ramifications for others in the euro area. And again, whether that is something that is well controlled, how that plays out exactly, but restructurings of debt in the periphery with pressures on others then is the issue behind the European call. And I would point out that in the case of the United States, it's increasingly difficult for the U.S. economy to thrive when any region of the world is under pressure, that the correlation between regional activity has gone up over the past 20 years.
Well, when you heard the jobless numbers here in the U.S. today and that revision of GDP second quarter from 1 to 1.3, although it's not anything to start a celebration about, at least it's going in the right direction. Is that pause?
Sure. It's not even all of the good news. But you know, it's one of these things where, you know, there's different time frames for different data points. The jobless claims are very, very timely data. There was this immediate statement by the Department of Labor this morning that was maybe bad seasonal factors. Yeah. The reality is that unadjusted unemployment insurance claims, no seasonals, were at an all-time low for this economic cycle, for the recovery so far in this morning's data. The production data in the United States have looked pretty good. The retail sales data a bit more mixed, but there's been no terrible drop. We don't think things stay that well, honestly. We do think that things will deteriorate some. But the U.S. is still growing, and you know, we think that you can draw some comfort from that.
We mentioned Greece. If we could go back to that for a second, one of the main concerns, one of the worries that's rattling the global markets is what a Greek default could mean not only for the Eurozone, but a domino effect, and perhaps maybe have the same type of effect that Lehman had on the economy here right before the collapse in 2008. What type of a shock would a Greek default have on the global markets?
Well, that's exactly what investors have been trying to consider in this sell-off to date. You know, we obviously had our own domestic policy problems, particularly in the early part of August, where things got really frightening and unnecessarily so. But how Greece plays out within the European economy, within the global economy, is a very open question. You know, the issue of a restructuring when there's a framework for restructuring of sovereign debt in place, when the facilities to minimize the damage and the overspills to others may end up being something that's not as severe as markets currently discount. We know that the U.S. exposure, for example, to the periphery of Europe specifically was, in fact, less than I would have thought. When we look at sort of some of the stress test data, the macro level stress test data that the IMF put out last week, we can look at comparables for the United States and these sorts of things. But yet, something that would happen quickly, something that would happen with severe political ramifications for others in Europe, that's a different story. And we have all of these things are still on the table.
Stephen, if I could ask you in our last minute, we heard today that the German lawmakers, that they did approve an expansion of that euro area or Eurozone rescue fund. Is that going to be enough to stabilize the macro picture in that area?
Well, it's a move in the direction of stability, but it's not sufficient. I mean, our European team...
Is it also a move too late?
I don't know if that move is too late. Better late than never. But, you know, our European team would give you a long list of criteria, a long list of additional votes and additional actions that were needed. This was only one of those steps.
Stephen Wieting, economist, managing director, Citigroup Global Markets, joining us here on set. Stephen, always a pleasure. Thanks for coming in. I appreciate it.